Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 4 stocks that have dividends going back over 100 years. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're discussing 4 stocks that have dividend payments going back for centuries. And on top of this, they also come in with a strong buy consensus from Wall Street analysts. So we're going to take a quick look at these companies, what it is that they do, details on those long-standing dividends, and of course what Wall Street is predicting for the stock's future. You can follow along over on TipRanks.com or by downloading the TipRanks mobile app using the links in the description down below. Now let's jump right into our 4 dividend stocks. First up is a company whose name you're probably familiar with, that is Colgate-Palmolive. They are behind the production and distribution of many popular, trusted household and personal care brands. Their stock trades under the ticker CL, currently priced just above $80 per share. Overall, in the past year, they've gained 8.7% and have gone up over 10% in the last 3 months. The company was founded back in 1806 and started paying a regular dividend in 1895, so that is 129 years of dividend payments. They also hold Dividend King status as they have 61 consecutive years of dividend increases under their belt. Their current quarterly dividend comes in at 48 cents per share for a dividend yield of 2.38%, just ahead of the sector average of 2.12%. Their next payment date is coming up on February 15th, and that was an ex-dividend date on January 19th. Colgate will be sharing their 4th quarter earnings report in just a couple of days on January 26th, and this does follow a quarter back in October where they increased their full year guidance. For Q4, analysts will be anticipating earnings per share of 85 cents, which is a bit above last year's earnings of 77 cents per share. And they do have a fairly solid track record here of exceeding those expectations. In the last quarter, they did see their net sales increase over 10%. Just a couple of days ago, we heard from a 5-star analyst at Stifel Nicolaus who did increase their price target on the stock. While the firm does remain cautious on the Americas, noting that volume growth will likely remain muted, they do anticipate year-over-year global market share gains in toothpastes, and lessening inflation and benefits from pricing should contribute to their gross margin expansion. Overall, the firm continues to view the stock's risk-reward as favorable at current levels. They are one of 12 analysts that have a current rating on the stock, which comes in as a strong buy with 9 buys and 3 holds. The average price target of over $87 would be an upside potential of 8.6% from current prices. Here we can see that most recent rating with an upside about 8% there. A high-end price target, a couple of them here with that 15% upside, and on the low end, a hold rating with a slight downside. On our list today is Eli Lilly. Founded more than 140 years ago, Eli Lilly is a leading healthcare company that manufactures and sells pharmaceutical products worldwide. Their stock trades under the ticker LLY, currently priced at $637 per share. They have seen some impressive growth over the past year, up about 84% and up 8.8% in the last 3 months. Eli Lilly has been paying a consistent dividend since 1885, so that is 139 years. Now, they don't quite get king status as they don't have consistent increases to that dividend every year as well, but it is still a very impressive track record of paying dividends. Their current quarterly dividend comes in at $1.30 per share for a dividend yield of 0.72%. Their next ex-dividend date is coming up on February 14th for payment on March 9th. They'll be sharing their 4th quarter results on February 6th, and a lot of attention is going to be put on the type of future guidance they provide. For their Q4, analysts will be anticipating earnings per share of $2.44, well ahead of last year's $2.09. One analyst that just recently raised their price target at Wells Fargo said that Eli Lilly may guide conservative consistent with 2023, and if this is the case, they wouldn't overly read into it and could see buying on any weakness. Also recently raising their price target on the stock was an analyst from Morgan Stanley. They said that Eli Lilly should provide first-time 2024 guidance in conjunction with their Q4 results on the 6th, and that they see 6% upside to consensus 2024 revenue based on those weight loss drug estimates. Eli Lilly does come in as a strong buy based on 18 current analyst ratings, and that breaks down to 16 buys and 2 holds. The average price target comes in at $662, which would be an upside of just 4%. Of course, the stock has seen a lot of growth recently, getting it closer to those average price targets. In fact, some of our most recent buy ratings here do have a slight downside because the stock has since surpassed. On the high end, we do have a buy rating here from Morgan Stanley with an upside of over 19% and a low end hold with a downside of nearly 6%. Third up on our list today is PPG Industries. PPG Industries manufactures and distributes paints, coatings, and specialty materials. Their stock trades under the ticker PPG, currently priced at $142 per share. Overall, the past year, they are up 13%, including a climb of 17.5% in the last 3 months. Founded back in 1883, PPG Industries has been paying a consistent dividend since 1899, so 125 years. Now, these guys also qualify as a dividend king with 52 years of consistent increases. Their next ex-dividend date is coming up on February 15th for payment on March 12th, and they currently pay a quarterly dividend of 65 cents per share for a dividend yield of about 1.8%. They actually just shared their Q4 earnings report last week on January 18th, where they did come out with an earnings beat. For the quarter, they did report earnings per share of $1.53, coming in a few cents ahead of estimates, and net sales of $4.4 billion. Looking at the whole year, they did have record sales of $18.2 billion and record operating cash flow of over $2.4 billion. Following their earnings report, we did have several analysts weigh in on the stock, one of those coming from Mizuho. They noted that the company's guidance for mid-single-digit volume growth in 2024 is a positive sign as it marks a turnaround from the stagnant growth since mid-2022. The guidance suggests an operational upside which hasn't been seen since the pandemic start, especially in the industrial coating segment. The PPG stock does come in as a strong buy with 9 buys and 2 holds. And the average price target of $163 would be an upside potential of 15% from current prices. And here we can see all of those ratings being reiterated in the last couple of weeks. On the low end, we do have a hold with an upside of 5.5% and a high-end price target coming from Mizuho with an upside of 23%. And last but not least today, we have Abbott Laboratories. Abbott Laboratories offers a diversified line of healthcare products to more than 160 countries, broken down into several different segments. Their stock trades under the ticker ABT, currently priced at $111 per share. Now, they've had some ups and downs this past year, currently up over 2% overall. They have seen growth of 19% in the last 3 months, but you will notice today they have dropped off a couple percent. Now, Abbott just made this list of companies with over 100 years, as they started paying their dividend out in 1924, and they also have dividend king status with over 50 years of dividend increases. Their current quarterly dividend sits at 55 cents per share with a dividend yield of 1.79%. Their last payment was on February 15th. The reason the stock is slightly in the red today is they just reported their latest earnings. Now, earnings per share were in line and revenue did come in with a beat, but investors are digesting some of the rest. For their fourth quarter, they did report earnings per share of $1.19, which was in line with expectations, and their Q4 sales came in at $10.2 billion, which did grow 11% year over year. The company has seen their U.S. sales decline by 6.4% year over year, however. But looking forward, they are continuing to regain their market share in the U.S. infant formula market. Now, we haven't seen any analysts reiterate price targets following this report quite yet, but a couple of days ago we did have some weighing in ahead of these results. One of those is an analyst from Wells Fargo who did raise their price target, noting that their tone at a recent broker conference suggested Q4 would be at least in line with the street estimates. They believe that their 2024 base business growth could accelerate over pre-pandemic rates. Right now, Abbott Labs does come in as a unanimous strong buy with 8 current ratings. And the average price target of $127 would be an upside potential of 14.8%. Down below, we can see these ratings coming in this past week, all in the double-digit upside potential here. We do have some low-end holds back from October with a downside of a few percent, and our high-end price target is this UBS rating at over 22% upside. So that is a quick look at 4 companies, all with over a century of dividend payments under their belt. Let me know your thoughts on these companies in the comments down below. I always appreciate hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you always do your own research and due diligence. Thanks so much for watching. Have a wonderful day, and I'll see you back here next time.